Time now for our series, Money Masters. They're the big names with the big money. This week, a rare interview with BlueMountain Capital Management's Andrew Feldstein. Now, BlueMountain Capital made our top 100 richest hedge funds in the world with more than $3 billion in assets this year. But we wanted to learn more about the man behind the fund.
The testimony you are about to provide the commission will be the truth.
In 2010, top bank CEOs were summoned to Capitol Hill to account for their role in the financial crisis. The top culprit? Credit derivatives, what Warren Buffett famously called financial weapons of mass destruction.
What were these credit default swaps
Was this purely a perfect storm?
Few people understand this $32 trillion industry better than Andrew Feldstein. He worked at J.P. Morgan, a firm that quite literally wrote the book on credit derivatives, before founding his own hedge fund, BlueMountain Capital. Everything about him, from the clean, spare lines of his office design to his judicious choice of words,
integrity is the most important.
Seems shockingly out of character with what you might expect from one of the inventors of those so-called weapons.
You were there at the beginning of the credit derivatives industry. You have a lot of people now talking about credit default swaps. Do you think that they're being mischaracterized?
Yeah, I think credit derivatives are an incredibly valuable tool to the financial markets. And I think the financial markets would be much worse off without them. You know, the cliche is automobiles. Very valuable. Society would be much worse off without them. But like the automobile, financial instruments can be misused. If you get a drunk driver behind the wheel, and if people don't obey the rules of the road, or if the rules of the road are poorly written, valuable tools can be misused and the consequences can be bad.
When he left J.P. Morgan in 2003, he was head of structured products. The market was on an upswing, and there were no hints of the financial crisis to come. So why leave?
It became apparent to me that I had this real entrepreneurial drive, this drive to create something and to build something.
Over one of his monthly breakfasts with his Harvard Law School pal, Stephen Siderow, he proposed starting BlueMountain.
It took me almost no time to decide, well, this is the kind of guy I want to be in business with, because he had tremendous intelligence and more importantly, tremendous integrity.
Within a year of launching, Feldstein and Siderow expanded the team from 10 to 50. They now employ 120 with offices in New York and London. That rapid growth is a direct reflection of BlueMountain's investment success. In 2010, its main fund registered returns between 8.5% to 9%, nearly double the industry average. Nearly 80% of those gains came from trading individual credit default swaps, along with investments in the riskiest portions of collateralized loan obligations. Their strategy requires both complex quantitative analysis and a relentless focus on risk management. With a front row seat to the spectacular collapse of hedge fund long-term capital back in 1998, Feldstein learned early on in his career why both are equally important.
You saw a bunch of just really smart folks fail because they didn't manage the liquidity position vis-a-vis their creditors well. That left an indelible mark on me.
With Feldstein, risk management is more than just good business. It's almost an obsession.
Andrew and I periodically travel together. He will spend, large chunks of those plane rides reading over every single write-up on every single credit position we have in the book. He is looking for patterns that might not be apparent from our existing risk measures.
Explain some of the investment opportunities that you see right now and how you would take advantage of them.
Borrowers that previously financed themselves, whether those are small businesses or consumers, via the securitization market. I think we see sort of big evacuations from traditional players in those markets. And that creates the opportunity to innovate, to find new ways to provide capital to those sorts of borrowers.
So when we look at sort of global macro events, how does that figure into your framework?
The outcomes of sort of the big fiscal questions and the big fiscal debates that we're watching play out are very important. Our objective is to avoid placing any bets on these macro outcomes. We don't think they're very predictable. And
you may avoid betting on the unpredictable in his portfolio, but back in 2008, he did make a bet on another Harvard Law School classmate.
What do you think has gone wrong in Washington? I mean, many people want to blame the president. president often cites the Republicans.
It's pretty easy to describe the problem. I mean, we have borrowed too much, but we've made too many promises. Pensions, whether public or private, medical care. You can stick it to the borrowers or the entitlement holders, and that's called austerity. And that would certainly aggravate this trend toward inequality. Or you can spread the pain around the society at large and sort of evenly cause the taxpayers to pay. And that's pretty much it. It's simple to describe the problem. It's hard to solve the problem.
As for the future, Feldstein says he's entirely focused on Blue Mountain. But I couldn't help but make a bet myself.
Andrew, I'm going to make a prediction. I see a future in politics at some point.
Which got a typically measured response.
That would be a bad prediction.
It would be?
I don't have sort of any illusions about sort of my significance in the larger world. I do have passions to contribute toward making the world a better place.
All right, Andrew has two main funds at BlueMountain Capital. One is a credit fund / long-short fund. That's up about 3.3% as of October 31st of this year. And the equity alternative fund, that's up about 9% over that same period of time. And in the interest of full disclosure, I should mention that I did work for Andrew Feldstein when I was in business school part-time, going to Columbia Business School. I worked in the synthetic CDO group of JP Morgan for Andrew way back when. That must have been 1998, 1999.